This video will provide a walkthrough to the solution for exercise 1013, recognition of intangible assets via an interest-bearing note payable. Here's the data for our problem. On January 1st, 2025, Nickelback Limited purchased a patent for $50,000 plus a $60,000 5-year note bearing interest at 8% payable annually. Upon maturity, a single lump sum amount of $60,000 will be payable. The market rate for a note of similar risk and characteristics is 9%. Nickelback estimates that the patent will have a future life of 20 years, and the company follows ASPE. A requirement for this problem is to simply prepare the journal entry for the purchase of the patent, and the hint is to refer to the chapter on long-term notes receivable in the text. And that's because the treatment for notes payable is almost identical to notes receivable, but from a liability perspective instead of an asset perspective. So to record the acquisition, we will debit an intangible asset account for a patent, and we'll leave that blank for now and focus on the other items first. The easy part of this transaction is cash. The company pays $50,000 in cash, so we will credit cash for $50,000. Then we have to deal with the note payable. Since the term of the note payable is longer than 1 year, we have to calculate the present value of the note. Using our calculator, we will enter 5N for the number of years, 9IY, which is based on the market rate for notes of similar risk. A common mistake students make here is to use the interest rate on the note itself as opposed to the market rate. Don't do that. Always use the market rate. So 9IY. Then we will enter the payment. The interest payment is based on the face value of the note multiplied by the 8% stated rate on the note. That's $4,800. So we'll enter $4,800 and then PMT. And at the end, there's a $60,000 balloon payment or future value. So we'll enter 60,000 FV and then compute PV to end up with the present value of the note payable of $57,666. Therefore, the amount at which the patent will be recognized and recorded is the sum of the cash plus the present value of the note payable, or $107,666.